what is the outlook going ahead? Let's understand this from the management themselves. Mr. Siddharth, hi, good afternoon. Thanks for your time today. With 10 formulations and 9 API DMFs filed, when do you expect meaningful commercialization benefits?
See, all depends on when the patent expires, when our customers get the approval, and when, if it's a formulation, when we get the approval. So, typically, as you know, the development cycle ranges anywhere between 2 to 3 years, and then the review cycle tends to be between 1 to 2 years. And then the commercialization starts, if it's a launch upon approval product, then you will get the benefit, let's say in a 1 to 2 years time. And if it's a later launch product, then of course, depending on the date of patent expiration, the commercialization benefit would start.
And in biologics, Yesintek has gained strong traction. What is the current market share, and where do you see this share grow to in coming years?
See, it's already high single digit, low double digit, and it continues to be the number one biosimilar product in the US. And I think in a very short span of time, we have seen that market share inch up. And I think, as we have alluded to in the past, we've got also a very, very robust formulary coverage in the US, which covers almost 70% of the lives. And of course, unlike a typical generic drug where the penetration is quick, in biosimilars, the penetration to a good market share can take between 1 to 2 years. And I think, as I mentioned, that since the launch, our product has been listed on most formularies. We have got a decent market share and it's growing. And I think I won't want to necessarily comment that where it could reach, but I think we are very confident that over a period of time, we will continue to be in a lead position and the market share will continue to build on.
Okay, and also help us understand what is the peak revenue share potential expected from Yesintek, if you could share any numbers on that front?
See, again, it all depends on number of players and what kind of pricing strategy that each player has. But when you look at the brand, it's still a very, very robust $8-9 billion brand. I think we definitely think that this can contribute meaningfully in terms of the revenue. We have 4 products which is already contributing over $200 million plus in annualized revenues globally. And over a period of time, we definitely expect that this could be the 5th product in that family, which can contribute significantly in terms of absolute revenues and the revenue growth in the coming quarters.
Okay, and India participation of semaglutide will see increased traction next month onwards. How are you positioned in this market?
See, India is a very different market because India is the only market which requires clinical trial. We have an approval to start our phase 3 clinical trial. We had divested our India formulation business to Eris 2 years back. And so we will look at bringing this drug either through a partner over a period of time by either conducting a trial or once we receive an approval in one of the ICH countries, then seeking for a clinical waiver. But, there have been other approvals in India and we do expect these companies to launch the product very soon. And India is going to be very competitive market. So we'll have to really assess that whether it's worth or is there an economical sense in conducting a clinical trial, because the competition is going to be so heavy and the price expectation for the drug in India is significantly lower compared to pricing expectation in the other parts of the world.
Okay, Mr. Mittal, on that note, we'll let you go. Thanks so much for your time. So viewers, that was the management of